Thank you for joining us now. I am Frank Omalape. And now, stock investors lost about 281 billion naira at the end of trading on the floor of the Nigerian Exchange Limited last week. The NGX All-Share Index and market capitalization depreciated by 0.96% and 0.95% to close the week at 53,804.46 basis point and 29.31 trillion naira respectively. Also, all other indices finished lower with the exception of NGX Premium, NGX Insurance, MERI Growth, Consumer Goods, Oil and Gas, and Industrial Goods, and NGX Growth indices, which appreciated by 0.54%, 1.18%, 0.44%, 0.67, 0.91, 0.06%, and 7.15% respectively, while the NGX ASeM and NGX sovereign bond indices closed flat. According to the NGX, 36 equities appreciated in price last week. This figure is higher than 24 equities that appreciated in the previous week. Now 27 equities depreciated in price, lower than 45 in the previous week, while 94 equities remained unchanged, higher than 88 equities recorded in the previous week. A total turnover of 751.9 million units of shares worth about 20 billion in 15,000 deals were traded last week by investors on the floor of the exchange, in contrast to about 944.29 million units of shares traded in about 18,615 deals last week. Away from the International Monetary Fund has called for a review of the Central Bank of Nigeria Act of 2007 to strengthen the bank's autonomy and governance. IMF made the call in the latest report titled Nigeria 2022 Article 4 Consultation Press Release, Staff Report and Statement by the Executive Director for Nigeria. The call for a modern review of the CBN Act of 2007 comes as the bank's autonomy has been disputed over its Naira redesign policy, as the Supreme Court recently made an order to suspend the ban on the old 1,500 and 200 Naira notes. Many have questioned the right of the court and the independence of the CBN. The Speaker of the House of Representatives, Femi Gbajabiamila, also recently said that regardless of any supposed autonomy of the CBN, the Apex Bank are still bound by law. However, the IMF stressed the need to maintain the autonomy of the central bank to make price stability the main objective of the bank. It also urged the CBN to resume the publication of its annual financial statement as well as abide by international standards. In the meantime, the Chartered Institute Bankers of Nigeria at the weekend said it was liaising with the body of banks' chief executive officers to address the current challenges occasioned by the redesign of the 1,500 and 200 Naira banknotes. It said the banks will continue to remain open to serve the public as long as it was safe to do so, adding that the safety of bank workers was paramount. Several deposit money banks have come under attack by angry customers, with protests recorded in different states across the country over the scarcity of the redesigned banknotes. President Muhammadu Buhari on Thursday said the old 200 Naira note will be legal tender till April 10, while urging Nigerians to deposit their old 500 and 1,000 Naira notes with the Central Bank of Nigeria. However, the CIBN, in a statement signed by the President Chairman of Council, Ken Opara, said the management of banks had been empowered to take proactive measures to close operations in locations where there was a security challenge and informed the CBN. And now, Gold Store & Co. Limited, a Pan-African credit rating agency and business information provider, has said Nigeria's insurance industry's 2022 gross premium will rise above 700 billion naira from increased economic activities. It stated these in its 2023 insurance industry report titled Nigerian Insurance Industry Poised to Survive the Weak Macroeconomy and Election Year. According to Agosto & Co., the Nigerian insurance industry estimated gross premium income maintained a double-digit growth trend and crossed the 700 billion naira mark in fiscal year of 2022. So the uptick in the industry's premium was driven by several factors, including improved economic activities and stronger regulatory support. The 2023 annual report showed a comprehensive review of the insurance landscape in Nigeria and the near-term expectation for the industry. It also contained a review of how the Nigeria's insurance industry had fared amid the lingering macroeconomic headwinds and outlook for the industry in an election year. Amid the worsening Naira crisis, the total amount of currency in circulation in the Nigerian economy has tumbled from 3.3 trillion Naira to 1.54 trillion Naira, a Central Bank of Nigeria document has revealed. This came as a biting shortage of new Naira notes amid an acute scarcity of old currency has inflicted untold hardship and pain on millions of Nigerians, leaving several people stranded. The latest central bank data from a report presented by the CBN Deputy Governor Fola Shonobi at a forum in Abuja showed that the total amount of currency in circulation fell by 53.3% within 3 months. Specifically, the currency in circulation fell from 3.3 trillion naira recorded in October 2022, a few weeks before the CBN began the implementation of the Naira redesign policy, to 1.54 trillion naira in January 2023. The 53.3% decrease in currency in circulation followed bank customers' huge deposit of old 1,000 naira note, 500 and 200 naira banknotes ahead of the CBN's February 10, 2023 controversial deadline. Among other things, the CBN Governor, Godwin Emefiele, had said one of the objectives of the Naira redesign policy was to mop up currency outside the bank vaults, which he put at 2.7 trillion naira. In the meantime, the Association of Senior Staff of Banks, Insurance and Financial Institutions has announced that banks should begin operations from Monday, February 20, 2023. The association disclosed this while suspending its plans to commence strike action Monday. It will be recalled there had been several cases of protest and destruction of bank facilities across the country over the Naira scarcity. The president of the association, Olusoji Oluwole, disclosed this Sunday. He, however, cautioned members to, without further instruction, shut their doors and gates against customers whenever their lives are under threat. A former Minister of Finance, Dr. Idika Kalu, has faulted the logistics of the Central Bank of Nigeria for the crisis that has characterized the distribution of new 1,000 naira, 500 naira and 200 naira notes. Speaking at the weekend, Kalu noted that the new naira scarcity was a result of a huge logistic mistake. Kalu added that the CBN ought to have done its preliminary assessment of how long and what it would take to ensure the efficient distribution of the new notes. He said the CBN ought to have assessed the timing, which is predicated on every aspect of the procurement, the paper for printing, whether it is imported or locally paid or made, the printing process itself, the logistics of identifying the various constituencies, the banks, the communities, the rural areas, and all segments of the country. Kalu said the people are not interested in all these details, but the CBN should have taken into account how they are going to deliver on it. He also noted that there were other policies that the CBN and the federal government could have introduced if they wanted to tackle corruption and a high amount of currency in circulation. The Lagos Chamber of Commerce and Industry has warned that the sustained rise in the general price level in recent times has caused some weakening in purchasing power. The chamber, in a statement signed by its Director General Chinyere Amona, said the rising inflation had worsened the plight of Nigerians, particularly at a time when multidimensional poverty had climbed too high, with an unprecedented 133 million Nigerians living below the poverty line. According to the LCCI, while the Monetary Authority keeps hiking rates to beat inflation, the supply side should also be explored with the same vigor. They said other monetary and fiscal policies should be equally deployed to tame inflation. The statement added that the CBN should also check the extent of its monetary financing of the federal government through ways and means. According to the National Bureau of Statistics, Headline inflation inched up by 0.47% to 21.83% in January after shading a few basis points in month of December 2022.